Welcome back to the UK Crypto Podcast. I'm Paula, and as always, I'm joined by Matty. Today, we're talking to Daniel Gold, CEO of Stratiphy. Daniel comes from a background in investment and mathematics, but what really caught our attention is what Stratiphy is building today. The company has become one of the first platforms in the UK to offer Bitcoin and Ethereum exposure through an IFISA structure, alongside a wider mission of bringing institutional investment tools to everyday investors. We'll be talking about how professional investors think differently from retail investors, whether maths can beat emotion when it comes to investing, how technology is changing the investment landscape, and why Bitcoin inside a tax-efficient wrapper could be a major step forward for UK investors.
Before we get started, a quick word for today's sponsor, which is the Crypto Wolfpack. Crypto Wolfpack is one of the UK's most active and fast-growing crypto communities, bringing together traders, investors, and crypto enthusiasts who want to learn, grow, and navigate the markets together. Inside the Wolfpack, you'll find live streams, market analysis, educational content, trading tools, community discussions, and much, much more. And the best part is that even if you're not a Wolfpack member, you can still access some of our completely free training. One of the courses we'll highly recommend is our brand new TradeBot Pro course. In less than 30 minutes, this free course will take you from complete beginner to having trading bots set up and running for free. No previous experience is required. Just follow the step-by-step lessons and you'll be able to see the automation in action for yourself. If you'd like to check it out, head over to cryptowolfpack.co.uk or click the link in the description. Daniel, welcome. We really appreciate you coming along. So if you want to give us a very quick snapshot, tell us about Stratiphy. Tell us what it is that you do.
So look, thanks for having me here. It's great to be talking to you guys. Stratiphy is a retail investment app. So we've got a couple of things that are distinct about the product you can't get elsewhere, which is you can build investment strategies. So clients can decide how they want to invest and then backtest their strategy over 10 years. And then if it looks well, it looks good in their backtest, they can invest into their strategy and then everything happens automatically. And we've just recently introduced crypto ETNs in our IFISA wrapper, which is something we have, which is a little bit unique in the market. And I think we'll spend some time talking about that as well.
Yeah, absolutely. Sure. Because I think investments are changing. We always talk on the podcast about diversifying people's portfolio, and obviously we talk a lot about crypto because that's our bag. But I think there is this argument for having diversification, and I've had a look at your platform. It's actually really interesting. So I look forward to exploring that a little bit more. But I think before we dive into that, tell everybody a little bit about you. What's your background in terms of where are you coming from, Stratiphy? What's your background? How has it led you to where you are now?
Yeah, I mean, look, my background education-wise is in mathematics. So I did a PhD in algebraic geometry, and then started my first business in kind of solar energy. So I've got an interest in mathematics, sustainability, but then most of my career was spent in banking, in mostly sort of derivative pricing. So I was working on interest rate option pricing. So it's traditional finance, traditional products, derivative products in this case, but they are all kind of geared around risk management. I was in the risk division in the bank. So everything I've kind of learned in my kind of corporate career has been instilling kind of risk discipline and a risk approach. And that kind of comes back to monitoring risk, looking at sensitivities, looking at diversification of your portfolio. So that's my kind of background. And then, through various means, I kind of learned how these banks were building these quantitative, systematic strategies for clients. And the kind of motivation for starting this business was to bring that style of investing to the mass market, to retail investors, but still while bringing that risk discipline to everyone. So that, when you're talking about diversification, you're coming from, I guess, the opposite angle from me. You're saying if you're a crypto investor, there's an interesting angle to diversify into
for sure.
Other asset classes. I've kind of come from the other side, saying if you're a traditional style investor investing into stocks, ETFs, there's an interesting angle to diversify into crypto products.
Yeah.
So we make a lot of content on this because obviously there's been this real crossover and this will to have the crossover from the major financial big boys, if you like, that have been venturing slowly into crypto, and the two worlds are merging. Now, we haven't got to go that far back, and the two worlds were very, very distinctly separate. But there's the blurring of the lines now, and we make a lot of content on this, don't we? We think the lines now have been blurred so much that there's no road back now. I think there are some people into crypto that are actually anti-traditional finance. That the Bitcoin maxis they had one belief system, but that's dead now. I think the two worlds are firmly merged, and it's only going to merge even more, I think, moving forward. Which is why I was so interested when you guys popped up, because actually we'll talk about it later on. But there's that product that is very interesting to people that are into crypto and also people into traditional finance, because it's an interesting one. But let's talk about you a little bit. So so you was into finance, and what made you decide to go and get rid of your probably safe job and go and do something on your own? Now, I always respect anybody that has the balls, let's get it out there, to go and do something entrepreneurial like this. So, but what was the reason for that? Why did you go from probably was a safe job to go and do what you're doing?
Well, I mean, that's I guess ultimately down to personal lifestyle choices. I mean, I've always been kind of entrepreneurial. I've always wanted to do my own thing. I was working in the city, because it was a good sort of safe job, and it was providing a regular income, and didn't have to worry about that from day to day. And I've got no, I never say like starting up your own business is the right thing for everyone. Like there's a lot to be said for a safe job. But, I've always had that kind of entrepreneurial itch. And I tried to start up various different companies while I was working in the bank. I had lots of ideas. I was kind of doing things on my own. But this is something that I saw the banks were offering to their clients, and I saw you couldn't get as a retail investor. And it has a lot of value in the sense that these portfolios that they offer to their clients are personalized. They're systematically run. They're constantly monitoring the market and updating, actively managed. And I thought that all sounded amazing. I'd love to run my own investments that way, because I don't like to invest based on emotion or just based on hearsay. I'm very kind of, to some extent technical. I like to be scientific about things.
Your maths is your thing. So you want
maths is my thing. So I think it's fair to say. So I like to make my investments based on analytics, and you just can't really easily do that as a retail investor. And that's why I wanted to start up this. But it is a big risk, for anyone to kind of leave a corporate job, start up a startup business.
Sure.
Almost all startups fail.
It's not for everybody. It's not for everybody.
We spoke about this in the last podcast, actually, a little bit. We touched on it, didn't we? We were talking about people going into retirement and stuff, and we were actually talking about whether people, those people that have actually worked for themselves, actually stand a better chance of being able to succeed with trading and stuff, because they'll be disciplined. They realise it's hard work actually working for yourself. I don't think sometimes people realise just how hard it is, how much harder you probably have to work when you work for yourself than for other people.
I can say I never worked this hard at the bank. As I am now.
There you go. Honestly, literally, that's what we've been saying in the last podcast, and we didn't even know the conversation was going to go this way. But listen, people who are watching this podcast will very, very, very rarely get an opportunity to ask somebody that's worked in finance, especially in the city, these kind of questions. So, if there was, is there anything that really surprised you about the finance industry before you went into it? Once you was in it, you were like, "Wow, didn't realise that was like that." Is there anything like that?
I mean, there is. One thing that surprised me when you're in a sort of a well-established, top bank, I was really surprised by how kind of antiquated the systems are that they use to monitor processes, run processes, retrieve market data. It's kind of been built up over years piecemeal, and I think it's the same in any large organization. So I'm not pointing any fingers at anyone in particular, but this I was a bit surprised by, and also the risk appetite. They're very low risk. They're not taking a risk in any sense, and that's both of these, in my view, are the opportunity for startups. Like, we can build tech which is much more agile, much more fluid, dynamic, up to cloud-based, and it's amazing, to be honest, the stuff that not just us but most startups build these days relative to what a FTSE 100 company has. It's, I'd say, just cleaner, it's starting from a clean slate. And we're also prepared to take risk. I think if you look at the most successful startups, they're the ones who've, they're not just doing the boring vanilla stuff. They're taking risks. They introduce things constantly. Some things don't work, and that's not a bad thing. At least they're trying things, and then when things stick, they double down. Traditional companies don't want to take these risks.
Yeah, and I think it kind of fits into some of the previous episodes we've talked about, because I really believe that the blockchain technology that's attached to crypto is so valuable compared to the systems that we've got in place at the moment, that moving forward, TradFi can't really ignore that. But how they integrate that is not going to be quick.
No.
Because none of these huge organizations, that ship turns very quickly, do they? But I think once it's in, it's going to be in, and there'll be no turning back.
Yeah, it'll be if they when they start making changes, they're in for the long haul. They're not looking for a 6-month trial. If they're going to make a change, they want it to be like that for the next decade.
Yeah, exactly. Exactly. If they're going to start changing their payment rails, then they're not going to do that lightly. No. They're going to be making sure that they're really convinced it's going to work. And once it's in, I mean, look at how long they've had these systems in place. It's decades. It's not going to be a quick change to go back. And I think that is the movement moving forward, because what you were saying there's so much red tape in these organizations, isn't there? And that agility to move is not very fast. I think from retail investor perspectives, sometimes it feels like the big institutions have all the opportunities. Mm-hmm. And is that kind of what you were feeling, to want to be able to offer more opportunities to retail investors through your platform?
In a sense, yeah. I mean, the institutions have opportunities in some sense, because they have history, brand name, heritage. They've got resources. They can do a lot with that. But they're also hamstrung by, they can't move quickly. They have a much lower risk appetite. Decisions are made by committee a lot of the time. So we can be more agile, and we can introduce things. We can take a risk where they can't. And so we're doing that in many ways. The one is democratizing access to this style of systematic portfolio management. So technically they can offer this, no problem, but they don't offer it to retail investors because it's outside the risk appetite. They also don't have the ability to let people be autonomous and create strategies on their own and then backtest them. If they wanted to build this, I'm sure they could, but it's outside the risk appetite. It's not something they're going to do. And so we can do this. And, in the crypto space, we're offering products they would never, look at for, inside wrappers they would never touch until it's mainstream.
I think you touched on something really interesting there. You got about almost retail versus institutions. I think there is this perception by retail that institutions operate differently, and he's already touched on it a little bit there. He's basically they're very risk off, almost, you're saying. And when it comes to like their portfolio construction and the position sizing, this must be teams of people that are making these decisions. This isn't just a case of one person, I should imagine, in these institutions. Would that be right?
Absolutely, yeah. I mean, so this was kind of in one of our early pitch decks, how we positioned the company, that, if you go to a bank, they'll have different teams for client onboarding, client, and then strategy teams designing what the client wants, then quant teams building the client solution, then implementation teams, trading teams, then downstream risk management teams. So there's a huge number of people, delivering that end-to-end client interaction. And we do the whole thing with a handful of people, because we automate everything A to Z.
Yeah. You're using technology to fullest, aren't you?
Yeah. It's a totally different paradigm. But that's the opportunity as well, to operate at a lower cost base.
Yeah, because the average retail investor is not coming at it with the same finances as the big institutions.
So they're also not putting the same amount of money on. So
well, that's what I mean. That's what I mean. So it's
more money,
that
more
balance.
Risk.
Yeah, exactly. So tell me how you're different to other investment managers out there. I think it's probably would be really good for people to understand why would they pick you guys to go and sort out their portfolio.
So it depends who you're comparing us to. Like, if you go to a traditional investment manager, they'll typically have a minimum portfolio size of 100K. They wouldn't onboard clients without having that minimum in deposit size. So we have a minimum investment of £100. So we're really trying to democratize this and make it available to the mass market. But then in kind of the investment platform space, our kind of peers, there's no one really offering this systematic investment approach, which is personalized. So there's a whole range of things out there in the market, and it's a huge market, and there's different things for different people. But the typical platforms offer self-directed investing, model portfolios, thematic investing, or copy trading. So I think that ability to design your own strategy, crucially to backtest it over 10 years, and then to autonomously and automatically invest, that's the thing that we're offering that no one else is offering. And all the portfolios are unique. We're not, trying to ship the same thing to everyone. So it's a real high quality service. And that I think sets us apart.
Okay, so one of the things in our community is that we really make a big deal about is talking about taking emotions out of trading and strategies. And one of the things that jumped out at me when I jumped onto your website, and actually, although you probably didn't word it in that way, it very much was about that, where you've got a strategy where it's going to be doing it without emotions. And if there's suddenly a bad press article, your strategy isn't going to get depressed. It's just going to do its job. And we talk about this a lot. So can you just give us a little bit of a breakdown really about your platform, what the users get, what kind of an experience they're going to get on there, and what they're going to see and what they're going to be able to pick from, that type of thing?
Yeah, sure. I mean, taking the emotion out of investing is key to what we're doing. And I think you're right to kind of pinpoint that as one of the core messages. It's, I think that's something where people kind of fall short sometimes and make bad decisions. So we're trying to protect people by making the investments analytical. The way that it works is people choose the style of investing. So you can follow momentum stocks or momentum products, momentum ETFs, momentum crypto, and then you choose any. Some of this is relevant to crypto. Some of this is relevant to the stocks universe. But you can choose the sectors to focus on, regions to focus on, and your risk appetite. Once you've selected all the criteria and parameters, you can then run a back test. And then we present you with a chart of what would have happened if you'd invested that money 10 years ago. Okay. And then systematically follow those rules, rebalancing every month. And we show a comparison against the general market at the same time. And then we're not trying to push anything in particular. So if you choose a set of parameters which underperform, we'll show you that's what's happened. And if it overperforms, then we show you that as well. So it's a toolkit,
a lot of transparency,
really.
Then.
Yeah, we're a big fan of backtesting,
and it's
so we.
Yeah. No, sorry. I was just saying it's a toolkit, and it's supposed to be giving people power rather than pushing anything in particular.
Yeah, totally. Now, we're a big fan of backtesting. So we actually do crypto automations, and the backtesting is just so important. And we've actually just got a tool now with a new system that we're using where you can just infinitely backtest with trying different things out. And it's addictive. It really is. Now, for the right kind of person that is interested in that, it's actually, I find it quite enjoyable to do. Think, okay, well, if this would have happened this, what would have happened then? And I think it's interesting to know that something to do with a slightly more traditional finance world, even though you've got a modern twist to it, I think it's interesting that you've brought that in as well, because I think it's vital. I think backtesting is vital rather than just a hit and hope.
Yeah, because the reality is backtesting doesn't produce results moving forward.
No,
we all know that.
Anything. No, absolutely.
But it allows you to really understand how your strategy would have performed in market conditions. Yeah. And I think that's important because we can all come at investing with our best guess. But actually, when you can see it with real market data, it gives you a more informed decision, isn't it? It's all about information.
Yeah, and I think it's important to kind of point out that backtesting sometimes has a bad reputation because it's used in the wrong way. Often you'll find a firm or an investment manager showing you a back test that looks fantastic and they say invest into this. And that is a little bit meaningless, right? You can always find a strategy which performs well historically. The key is that we're not, dictating that this is a strategy you should follow. We're fully transparent. You can run any back test and it's up to you. So we're open about that. We're transparent, and we're not cherry picking, in a sense, the best possible option for you to invest into.
I think so. So I think if you could just say, like, most modern platforms, they'll be trying to solve a problem. So what's the problem that you guys are trying to solve for retail? What is it? If you had to put it into words.
It's helping people invest where they don't have the time or knowledge to manage their money. I think that, I fell into this trap like many people do. You start investing, you build up a portfolio and it's performing nicely, but then, all of a sudden you've got your job to kind of keep on top of, or you want to go out and meet your friends, go on holiday. You can't keep on top of your investments all the time. Also, some people just don't find it that much fun. So it's helping people actually manage their money effectively when they want to do other things.
Which is exactly why we built the automations for trading.
Because we realise that people have this dream, they want to be a day trader, but then actually don't realise how consuming it is. And actually the reality of doing that is very different to what they see on Instagram.
Yeah.
It's all consuming. The markets never stop.
Never stop.
And you can't keep on top of that.
No, not at all. Not at all.
Especially when there's so many factors that you have to take into account when you're thinking about your investments, because it's not just that product, it's how the market's performing, it's how the geopolitics are affecting it, it's how macro's affecting it. How do you keep on top of everything? And it's difficult, isn't it? If you don't immerse yourself in that world, and actually what you want to do is just have some investments because you're thinking about your long-term future, then you might not be interested in learning about all of this other stuff as well.
Exactly. Yeah. And that's exactly the use case that we built Stratiphy for. So, there's a different, types of people in the market. You've got the people who want to invest based on fundamentals, based on their knowledge of the market. And then you've got other people who want to kind of be a bit more passive. Some people want to be active, but don't have the time. So, we think there's a particular niche, particular cohort that want to be active and want to be analytical and don't have the time, knowledge, or inclination to do that work day in day.
I think in a minute we're going to talk about an exciting product that you guys have got, which is crypto related. We're going to talk about that in a moment. But like in a world of AI, now we've got Grok, ChatGPT, when we've got Claude, for example. What does your platform do that somebody couldn't do with TradingView and a Claude, for example? What is it you guys can do?
Yeah, that's a great question. We get that a lot. So there's a couple of things. So we're using AI, but when we say AI, we're talking about traditional machine learning to optimize the parameters which go into the strategies. So we're not using LLMs to generate investment signals. And the reason for that is you can't backtest something that's generated by an LLM. So an LLM is trained on data, all the data until now. So if you wanted to step back 10 years ago and say, what would I have done at that time? The LLM knows about the future. So you can't run a proper back test with an LLM for that reason. So we're not using that technology. And we're kind of using more of an analytical technology. Having said that, that doesn't mean there's no place for LLMs, and we're investigating whether we can use it for more kind of holistic or sentiment type analysis. But that's our current implementation.
Really interesting point he's made there. And I'm the team of people I've got around me were heavily involved in AI, heavily involved in trading. And I've never really considered the fact that it can't unknow what it knows. Until you've just said that right now. I've never actually thought about that, but he's absolutely right.
But you're thinking it's more of a supportive role to what you've got from the analytics side of things.
Yeah, there are use cases, but because of the fact that it knows about the future, it does make it very difficult and very restrictive. But at the same time, you've got to counterbalance that with the fact that it's so powerful and so accurate these days. So we do want to start using it, but we need to find a controlled way to use it.
I like that.
Yeah, definitely. And you've got a maths background, and I'm a figures guy. Like the data for me is so important. And I think if we're honest, let's be honest now, the average crypto investor, I should imagine the average stocks and shares investor, don't get themselves involved enough in the maths or the stats enough as they need to. This probably helps them get past that a little bit, doesn't it? Like I will spend hours and hours and hours crunching numbers and doing the stats for what I need to do. Whereas the most people around me won't do that, but they'll still want to get the good results. So I think actually your system potentially is going to be bridging for the people that are just time poor. They haven't got the time. Maybe they're capable of doing it.
Yeah,
But
or
they just haven't
maybe
got
they
time.
don't realise they need
People
to.
have got jobs,
Yeah.
people work,
Yeah.
people have got families, all the rest of it.
Yeah.
And I think actually using technology to its fullest, I think is really, really a really good use of technology. I think some technology gets used in a bad way.
Yeah.
But I think what he's talking about there, I think is a really smart way to potentially solve a problem for retail, to be involved in things that normally they'd find slightly more challenging.
Yeah.
Does that make sense? You understand what I'm trying to say?
It makes sense. I mean, I kind of fundamentally think there's no kind of shortcuts in life. You can't achieve good results without hard work.
Agreed.
And in terms of portfolio management, that means analyzing the market, doing historical back tests, looking for trends, not just guessing. Whether you do that or whether we do that is, someone's got to do it. So I think what we're saying is
more than a replacement. I think
Yeah.
you're trying to get at. This is a tool, not a replacement. I think
It's
that's
a
good. I
tool.
think that's fair. And that's not far off what when we talk about what we do in the Wolfpack, we always say this is part of what you do, not everything you do.
Yeah.
Isn't it?
Yeah, yeah.
It's a similar type of thing.
Yeah,
really.
100%.
Yeah, totally.
Yeah.
Okay, so I think that really leads on nicely there to talk about what caught our attention about you guys in the first place. And that's something that you've got which is unique in the UK market. So do you want to tell the audiences a little bit about this? Because I was super excited actually when I saw about it. So do you want to tell the audience about it?
We've recently introduced our Innovative Finance ISA, which is a product which most people haven't heard of. I hadn't heard of it until recently. It's a type of ISA which was originally introduced to support crowdfunding platforms. So people can invest into crowd-funded projects in an ISA wrapper. The FCA, HMRC, as of the beginning of April, as of this tax year, said that all crypto ETN investments cannot be in an ISA anymore. They have to be in an Innovative Finance ISA. So we've introduced our IFISA, and it is we're the only provider of that in the market currently.
Yeah, so that's really important, isn't it? Because you guys are offering this in the UK when other people aren't able to.
Yeah, exactly. So we're doing this because we formed a relationship with 21 Shares towards the end of last year to introduce their crypto ETNs into our app. And, taking a step back, that was something we wanted to do for a long time. As I said kind of earlier, this is a great way, I think, to kind of diversify your portfolio into an uncorrelated asset class and also traditionally a very high performing asset class. So I think there's a growing interest and a growing need to put funds into crypto assets. In the traditional world, we're seeing firms, advise putting in, between 5 and 10% of your portfolio. And, that if you take that across the whole market, it's a huge amount of volume that can, in addition, go into crypto. So we wanted to offer crypto inside our product. The FCA they regulated, they de-restricted access to crypto ETNs as of October last year. And so that was, we wanted to take advantage of that opportunity and form this relationship with 21 Shares to offer their products in Stratiphy. And recently we just got the IFISA permission and we're now offering that in an ISA wrapper.
So how come you guys were like one of the, or if not the first one? So how did that even happen? How did it happen that you guys were front of the queue?
Well, it's kind of a old story, I guess. So the HMRC governs what can go into ISA wrappers. So it's an HMRC regulation. They said in October last year that crypto can be in an ISA. And so various platforms allow these crypto ETNs to be offered in their ISAs. They then said that as of the end of the tax year, that will not be allowed anymore. Then crypto ETNs will have to be inside an Innovative Finance ISA. So we heard about this new rule. We had a chat with 21 Shares about it, see if we could offer this product. We looked into the regulation, the additional reporting requirements, the development work required, and we really wanted to support that relationship and support our customers accessing the best product we can. So, we thought it was worthwhile implementing all the new controls, new development work, and the new reporting requirements to offer the IFISA. And we went down that road. After applying, we kind of heard on the grapevine that no one else was applying. And it turns out in the end that we were the only ones who got the permission, so far at least.
Wow.
And the FT picked up the story, wrote about the fact that we're offering it. And,
saw it in the Financial Times, yeah.
Yeah.
So I was looking for crypto stories, unrelated. So I actually had a meeting with Daniel online, like a video call. Straight after that, I was looking for some crypto stories, went to the Financial Times, and about 8 down was him. Well, it wasn't actually you, but it was about your company.
Yeah.
They'd written the story, and I was like, I've literally just had a meeting with this guy. Like, it was literally half an hour later, and I'm like, wow, okay, fair enough.
Yeah.
So I think that must be good. Did you see any kind of increase in traffic or anything after that?
Yeah, absolutely. I mean, I think there's a huge amount of people who want to invest into crypto in an ISA because, there's various benefits. Obviously, you get the tax benefits, but you don't have to also worry about, handling wallets and keys and passwords.
Yeah.
It's also under the regulated umbrella, so there's a trust element. So there's a huge amount of people looking for this. And the FT article, we kind of got super lucky with the article, but that's kind of highlighted that we offer this to the wider market, and we've seen a huge amount of increase in interest and activity because of that.
So were your customers asking for exposure to crypto, or do you think this is bringing you new customers?
I mean, it's a bit of both. I mean, our customers were asking for it, and
I was about to ask that question.
Yeah.
I was about to ask that question. You literally got ahead, but that's brilliant. So it's good to know. Good to know that.
Yeah.
So I was wondering whether your traditional customers were interested in a Bitcoin wrap product.
Yeah, but you might expect it's kind of just the young people and the tech savvy type customers. But I was really surprised. It's kind of across the board. Some of our more sophisticated, older type investors, they were really looking for this. So it's across the board. We had interest from our customers, but obviously we've had a huge amount of new interest from new crypto only customers who were looking specifically for this product.
For that product, yeah. So like, just very quickly, if imagine you've got somebody now that owns crypto. They own it. They bought it on crypto.com, and they probably put it on their cold storage wallet, and that's what they do. Well, how does your product differ to them doing that? Because some people might not understand what it is. They might not understand what it is and what their ownership of it looks like.
Yeah.
There is a huge difference between buying crypto on crypto.com and sticking it on your cold storage wallet and accessing a wrapped Bitcoin product through you guys. But can you want to explain what the difference is between the two?
Yeah, I mean, it's a completely different structure. So when you're buying crypto through us, you're buying an exchange traded note, which is a form of a debt instrument. So essentially, you're buying a product which 21 shares manages. 21 shares then have an IOU to you, saying that we will pay you the economic returns of this crypto exposure. And then, that's fully, they do it in their own way. They fully collateralize their fund with physical crypto investments.
Mm-hmm.
So there is a whole kind of chain that links back to the underlying crypto asset class itself. But you're essentially buying an IOU from 21 shares. But this is an IOU physically backed by crypto and regulated by the FCA.
Yeah, because that's interesting, isn't it? Because we talk about crypto being away from the banks, but when it's away from the banks, it's also away from that regulatory framework. So it means that there's not protection to it.
Agreed.
Whereas you're introducing crypto in a way that actually you have got some protection, just like if you had your products in a bank.
Yeah. So it's you've got that peace of mind that it's a provider which has been audited, reviewed, their approach is, by the book, and you're going to get access to your crypto exposure. The the other benefit is really the tax, obviously, inside the IFISA wrapper. So if you own your crypto directly, you'll pay capital gains tax on the appreciation of the value over time, and that's something you can completely avoid within the ISA wrapper.
Yeah, I think a lot of it. Listen, majority of people do not like tax.
No,
that is the sentiment.
It's a fair statement.
Universal. No matter what you're into, I think that's pretty universal. So I think finding something that is tax free and is crypto is going to key into a lot of people's wish list.
Well, yeah,
for sure. I think there are going to be some hardcore crypto people. They're going to be like, I don't like this blurred line with traditional finance. However, those people are very small now. Those days have gone. There's been a transition in crypto. Most people are now embracing what we call the new crypto, where there is now this blurred lines into traditional finance. And I think that this is a really interesting product. It's a product that I'm going to be interested to look at personally, for sure. I can't wait to go and talk to Jamie about this. In fact, I might even make you a contact, actually. There's a guy called Jamie Nuttall. He is the UK's leading number one crypto accountant in the
tax
UK. Tax accountant.
Oh, okay.
Yeah.
He was the one that introduced us to ETNs last year. So
me and him have done conversations about ETNs and but it was coming, and he was the one that broke it. So he often will go and sit on the steering committees to do with the stable coins and stuff for the FCA and just stuff for HMRC.
Yeah.
But he is awesome, and he was so excited when the rumblings started coming along that this product was going to happen. So now it's actually landed. I think it might be interesting if I made you a bit of a link with Jamie, because I'm sure Jamie makes content as well. So I'm sure it'd be an interesting thing for
I'll be very grateful for the introduction.
About your product. And also, I wouldn't be surprised if he thought it was halfway good, whether he'd be talking about it to his clients as well. He's awesome, Jamie. We do a lot of work with him, don't we?
Yeah.
He's really, really good.
Yeah, absolutely.
But it's interesting how things have gone full cycle over that last 12 months, 18 months, where back then we were talking, oh, wouldn't it be cool if it does happen? We don't know if it will.
Yeah.
And now we've got somebody sat here on the podcast who's going, we're the first people in the UK to have it.
Yeah.
So it's almost like we've gone through a journey with this story.
Yeah.
So yeah, I think that's pretty cool.
Yeah.
I just want to go back a little bit though. Talk about, when we were talking about the Financial Times, how did that come about? Was that a planned editorial, or did it just come out of the blue, or what happened?
Oh, it was very much not planned. It was we became aware that it looked like we're the only platform going to get access to the IFISA wrapper. That was through our kind of network and connections in the industry. And then we saw actually the FT wrote an article that no one is going to offer an IFISA wrapper in the next tax year. They did their own research. They spoke to the whole market. They didn't speak to us because we're a very small company, but they kind of spoke to the whole market that they could find. They looked at the HMRC the website of IFISA providers, and they couldn't find anyone looking to offer this. So they just wrote an article saying no one's going to offer it. And then when we saw that, we knew we were going to be offering this. We got in touch and said, look, this is something that we're offering. And they sort of were very happy to take the opportunity to write about it.
With it.
Yeah.
They just ran with it.
Awesome. Sometimes you need a bit of luck, eh?
Absolutely. Look, you take all the luck you can get.
Yeah, I totally agree. Yeah. Did you have any kind of reaction from other people within the industry when they realised that you were the only ones? Have you had anybody from around your circles that have gone, how have they done that? Or has had it the other way around, where people are going, why are they doing that?
Yeah.
Why are you doing that? Because I guess there might be two camps on that.
Yeah.
So half of the camp might be super excited and think that's really cool. Half of the camp might be going, why are they getting involved in crypto?
Yeah, I mean, look, we get all these things all the time, and everyone's got preconceptions and ideas. Some people think crypto is a waste of time. Some people think traditional finance is a waste of time. Some people think, the crypto IFISA opportunity is not big enough, and I think that's the position that most of the traditional firms took.
Right.
We certainly didn't take that view, and we're very happy we didn't take that view. I guess it comes down to strategic priorities for each firm, what's interesting to them, what they have capacity to do, what is a significant volume for each provider, because we're a smaller, more agile, earlier stage company. These opportunities are very important to us. And the fact that we can provide a good quality service to customers as a result is just a win-win. So, we jump at these opportunities.
So I know you haven't read the article. I did. It was incredibly bullish. So it was a really positive article. That's what I mean.
Yeah.
So every word that was in there was like, they're the first, they're there at the front. Like, it was that kind of vibe, wasn't it, with the article? And they made a real point of going, fair play.
Yeah.
You know what I mean?
Yeah.
It was. I mean, obviously, I haven't written that, but that was the vibe of it. I read it and I was like, don't forget, I'd just come off a meeting with him.
Yeah.
And I was like, fair play.
Yeah, good.
Good.
I mean,
the boys
these
are
things
good.
are these things are normally like you reach out via a PR company, and then the organization picks up on it and writes something according to what you told them. This was totally not like that. This was more they became aware of us offering something interesting to their audience, and we just told them, in matter of fact terms what we're offering, and they wrote this in their own words. So in a sense, it's the kind of publicity money can't buy. Getting that kind of thing in the FT has been a great boost for the company and opened up opportunities for everyday crypto investors.
Yeah.
Do you think we're going to get more products like this?
Well, I'm glad you asked that.
By the way, that wasn't a leading question. I have absolutely no idea what he was going to say. Go on, tell me about it.
No. So we have some plans to develop our product over the next few months. I mean, you can already, inside the general investment account, invest into a strategy which manages crypto investments and traditional stocks and ETFs in the same strategy. And I think that's great, right? That's combining these two worlds in a very integrated way, so you can be very hands-off and get exposure to both asset classes. But inside our IFISA wrapper, we're looking at introducing new whenever we can.
Okay.
I can't, we're just consulting actually on whether we can introduce Bold into the IFISA wrapper. And, whenever new products become available, we'll introduce those as well. These are currently governed by a combination of the FCA and the HMRC. So as they change their rules, we will adapt.
Yeah. Go on.
I've got an off-piece question.
Oh, God.
How easy or difficult was it dealing with the FCA? Because in the UK, I feel like the overriding feeling is that they're just really difficult, and it's like it takes ages for everything to go through.
We can explain to him. So we've had guests on here that are from major organizations around the world, and they're saying they were the most difficult to deal with in any country. To the point sometimes they didn't bother doing business in the UK on the basis the FCA was so difficult to deal with. It's just easier to go to France. It was easier to go to Dubai. It was even easier to go to America. So sometimes they'd be like, just put it on the back burner for the UK. But from somebody that was already a UK business, was it a difficult process? Did they put you through it, or was you like, that was a breeze? We flew through it?
Well, no, look, I would say, I mean, they are difficult to work with.
Right, there you go.
It was. You can see that from the fact that, we are kind of behind Europe in terms of crypto regulation, and that's because they take a much tougher stance. They've got a tougher stance in various ways. I mean, in the US, you have commission-free access to equity trading. That's because the brokers are taking payment for order flow to fund the trading costs. That's not allowed in the UK. So I think they're more tough in many regards. And, for us to get authorized as a business and get the permissions we have to offer crypto products, it was extremely difficult. The authorization process took a long time. It cost a lot of money. We had to demonstrate a lot of understanding, a lot of capability. And the crypto, introducing that, we had to demonstrate the ability to manage controls, manage risk, manage client access. So there was a lot of hoops to jump through to get the permission. It wasn't easy at all. But, having said that, there's also, you've got to take their point of view as well. They are protecting customers and, the things they're demanding from us. I can't point at any and say they're not fair. They're doing things which help customers.
That mirrors very similar to what Steve, so the former global vice president of Binance, we had on here in an episode we had recently, and he said something very similar. So he said it wasn't a case of they weren't being fair, and it wasn't a case of they were being difficult. They were just so overwhelmed with the amount of work that everything was just so slow. So if there was an issue, then it would take months to get that resolved because everything's so slow. Where other countries, he's saying, were that area of department, whatever they labelled that name of that department in another country, was he was suggesting slightly better funded, so it was quicker.
Yeah, more efficient.
Where he almost felt a bit sorry for the FCA here because it wasn't like they were trying to be difficult. It was just a more case of, oh dear, that's happened. We'll talk again in 6 months because that's how long it's going to take.
I think that is an issue. We've come across as well. They are slow in some cases. Although, again, to give credit where credit's due, we applied for the IFISA permissions from them. From HMRC, but we informed them and went through a process of making sure that our approvals were covered for that, and that was done quite expediently. So we've had both experiences, and I think it depends on which team you're talking to about which kind of
good
permissions.
I want to now talk about from a user perspective. So first of all, how deep do their pockets need to be to get involved in your platform? Is this something you do with a very small amount of money, or do you need a much larger pot? What kind of people?
Yeah, who are you catering for?
Who are you catering for? Yeah.
Well, we're trying to make a product that's accessible to the mass market. So we don't want to make it restrictive to anyone. I personally want this to be something everyone can use because everyone can benefit from access to strategies and access to these crypto ETNs. Our strategies, there's a minimum investment of £100 because we can't really do much with less than that. So that's kind of where we set it as a minimum. And then for direct investing, whether that's stocks, ETFs, or crypto, there's no minimum. You can do that from £1.
Okay.
Wow.
That's
so
really
I actually
good.
wasn't expecting to say that.
Yeah, that's
I'm going to be honest.
good.
That's really, really good. And actually, I think that opens the market up so much more because for somebody, let's just talk about crypto audience here, yeah? To go and try something new, quite often like to dip the toe in.
Yeah.
And then once they feel comfortable with the system, then they'll load their accounts.
Yeah.
Actually, I think that's quite a smart move rather than saying, I don't know, let's pick a figure, £5,000. Because actually, there'd probably be a lot of people that would go and put £5,000 in, but would they put £5,000 in on day one? Unlikely. Not everybody. So actually, I think that's a clever business structure there. And I'm actually really glad you've said that. By the way, I didn't know what the structure was. So
in terms of the, what do you call it? The IFISA?
IFISA, Innovative Finance ISA.
Yeah. Is there like a cap for the amount of money that you can invest in that, like a normal ISA?
To 20 grand?
Do the two combine as in they're all ISAs and that's the cap? Or how does it work?
You have a £20,000 allowance for your ISAs in general, which you can split between all of your ISAs. So that means you can put 20k into your IFISA each year. Mm-hmm. Or you can put 10k into a stocks and shares ISA and 10k into an IFISA. So you can split it however you want, but your overall limit is 20k.
Yeah.
But if you have an existing... I think it was important to clarify
that though, because I didn't know if this was like something independent on its own that changed those kind of caps.
Jamie would love to make content on this.
I
have to make the introduction. Honestly, he's a tax geek. Right, he's literally a tax geek. That's his job. But he loves it.
You even made him a song.
I did make him a song. I'm not going to sing it now. We don't know Daniel well enough to hear the tax
please do.
Okay, so we now know it's low barrier to entry.
Yeah.
So $100. But I think, listen, let's be honest. I think most people want to pay a little bit more than that in. But I think it's good to know they can go and trial the system and have a go.
Yeah.
We're going to be able to get them a link in the description to make sure they can go and get it as well. I think that's another thing. And how long is the process? Like, for instance, if you go and sign up today, now, how long until you can be live and investing?
Oh, it's very quick. So, the whole app is self-serve. You download the app, you have to pass our KYC process. So you need to provide your personal information. You need to connect up a bank account with open banking, which is very high security. And then, you can do all this on your own and it can take 5 minutes.
I think that's really good as well because so there's no some products have cooling down periods so you can do things like so in crypto, some of the ones that are have got sign off by the FCA, they say once you pass KYC you've got to wait 48 hours and all sorts of stuff.
Before you can start depositing
they want you to have a good think about it before you press the go button. That's quite a thing with the FCA in crypto.
We do have that control, to be fair, right? So in crypto, you can't invest before 24 hours.
Okay.
So
Okay.
we do have that control.
But everything else it can be instant.
Everything else is
I
instant.
remember when they started bringing these in and people in crypto were losing their minds. They were like, well, if I didn't want to buy it, then I wouldn't be registering. Why are they making me wait 24 hours?
Yeah, it's a fair point.
I think that's kind of something that happens in a volatile market, doesn't it? Because you go on to log on because you see a price you want to buy something at. The price might not be like that tomorrow.
Stop your FOMO in, or stop the late night after you've been to the pub making a decision. I guess that might be something, but that's got to be such a small percentage of people.
Well, you'd have thought.
They're trying to save the few, aren't they? Not servicing the many, which are going, I'd like to get on there and go and get involved with my ISA right now, please.
I think it's supposed to be a cooling off period, so you're not investing under pressure.
Absolutely.
And not making rash decisions.
That's the thing. They often will treat anything that's investment like they would to make sure that they're not a scammer.
Yeah.
And actually, it's a bit of overkill, isn't it? Because listen, the scammers are going to scam whether you put that rule in or not. It doesn't matter. Like if they're trying to put pressure on you to go and make the investment.
But for the FCA, it's all about risk, isn't it?
That's
it's anything they can do to control risk.
That's their job, isn't it? That is their job. But just sometimes I find their rules a little bit frustrating.
I don't think you're the only one.
Well, we have to work within the framework, and that's part of the framework.
Course.
So
it's good you do. And I think that's there are now we're getting to a stage now where I think people are finding comfort that knowing that things are regulated. There are a huge amount of people that want deregulation. And there's a bigger movement for that. They want as much deregulation as possible. But there are a huge amount of people that will find comfort in the fact that the FCA regulated.
Yeah.
That it is all done correctly. And you're not some offshore company out of, I don't know, insert any random Far East country where it could be based, that it isn't from there. And actually, this is a UK thing and this is registered correctly.
Because and it's also supporting local kind of, people. Our developers are here, our team is here, our marketing here. 100%. So it's got that benefit too.
I totally agree.
I think a lot of the UK crypto investors feel like we just don't have access to the same kind of level playing field as some other places around the world. So it's nice to see that some of these companies like yourself are taking those steps to go through all of that process with the FCA and pay all the costs that are attached to that to be able to offer UK crypto investors regulated products, because I think that's a real gap in the market. And it's really, really nice to see that people in the UK have got access to that, because it's definitely the feeling that I get when I make content about UK crypto holders, that people just feel like we're just behind. I really appreciate that you guys are doing that.
Yeah, and I really think that it's an interesting thing, because we've got the crypto world, traditional finance world, the ISA world, and a tax-free element.
Yeah.
And I think that is going to key into a lot of people.
Yeah.
And I'm definitely going to although we've recorded this podcast, I'm actually going to go and make some TikToks about this.
Yeah.
Because actually this content would do really well on TikTok if it's presented in the right way. So I'm actually going to go and make those TikToks. Because I think people they knew it was coming, but don't know it's here.
Yeah. Or how to access it potentially.
For sure. Well, it's really nice to hear from you guys. It's taken a long time to build the business, and you've got naysayers all along the way. So it's nice to finally get to a point where people are kind of appreciating what we've built and starting to use it. It's great to hear.
I think you're going to be well received by the crypto community. I can't see any negative coming from this from the crypto community. The only people that might say anything negative are the traditionalist Bitcoin maxes that hate traditional finance in every shape and form. But there's such a small percentage of people.
Yeah.
They're noisy online, but they're such a small percentage. The majority of crypto UK people, I think, will be interested in this product. Whether they pull the trigger and do it is a different thing, but I think there'll be interest there to at least investigate it.
And I also think that there is a real gap in the market for people that are making traditional investments that haven't been able to go into crypto, because like you said earlier, setting up your wallet, going to an exchange, all of this stuff,
people like my dad.
It doesn't feel easy, does it, to do that? So there is a huge market of people that are actively investing that don't have access to these products now, that could potentially earn some decent returns. The volatility is much more than in some of the spaces that they're currently investing in.
Yeah,
absolutely. Yeah. And we're seeing that, actively happening. So we're seeing people transferring ISAs from all kinds of providers. Many of them don't offer crypto investments. So we know this is funds coming from traditional finance moving into crypto. So that's a big part of the story.
Yeah, absolutely.
Brilliant.
Daniel, it's been awesome. Thank you so much for joining us today and telling us all about Stratiphy.
Not at all. Thanks for having me.
Yeah, I appreciate you. I wish you all the best. Thank you.
Thank you so much for joining us on the UK Crypto Podcast. If you've enjoyed today's episode, make sure you subscribe, leave a comment below and let us know. Would you rather own Bitcoin directly, or would you be happy holding Bitcoin exposure inside an IFISA? Remember, if you are interested in Stratiphy, we will leave the link below. We'll see you next Friday, 7 p.m. for another episode of the UK Crypto Podcast.